Can AMC ride the meme wave again and make a financial comeback? In the whirlwind world of meme stocks, few names have sparked as much excitement as Keith Gill, better known as Roaring Kitty. His daring trades and charismatic advocacy played a pivotal role in the meme stock phenomenon that shook the financial world back in 2021. After nearly 3 years of silence, the unexpected return of Roaring Kitty to social media has once again thrown the spotlight on AMC Entertainment. Just last week, his reappearance coincided with a remarkable surge in AMC's stock price. From a quiet Friday close, the stock price more than doubled by Tuesday afternoon, surpassing $6. This sharp increase wasn't just a number, it was a loud signal to the market, reigniting interest and speculation around AMC's financial prospects. Roaring Kitty's influence extends beyond mere online posts. His strategic insights and bullish outlook on certain stocks have historically drawn a legion of retail investors, whose collective actions can sway market dynamics significantly. This phenomenon was evident as AMC, alongside GameStop, experienced a substantial uplift in their market values, reminiscent of the frenzy seen in 2021. With Roaring Kitty's unexpected comeback, AMC's stock saw a dramatic rise. But what does this mean for the company's future? Before diving into the current hype, let's understand the backstory of AMC's financial struggles. AMC Entertainment, once a titan in the cinema industry, faced towering challenges even before the world had ever heard of COVID-19. The company was grappling with a hefty debt load, a legacy of aggressive expansion and acquisitions. These financial strains painted a grim picture, with the specter of bankruptcy looming ominously on the horizon. As the pandemic shuttered cinemas worldwide, AMC's situation grew increasingly dire. Revenue streams dried up overnight, leaving the company scrambling to find solutions to avoid financial ruin. It was during this bleak period that an unexpected hero emerged from the digital realm. The first meme stock wave, driven by retail investors rallying on social media platforms, breathed new life into AMC's stock. This phenomenon saw the company's shares skyrocket, providing a much-needed cash infusion through opportunistic stock sales. In a twist worthy of a Hollywood script, AMC raised hundreds of millions of dollars, staving off immediate threats of bankruptcy. However, this financial reprieve was temporary. The fundamental issues of high debt and an uncertain market recovery persisted. In a bid to fortify its financial health, AMC continued to leverage its meme stock fame, executing further stock sales. These maneuvers brought in significant capital, but they also raised questions about the sustainability of such a strategy. The recent resurgence in AMC's stock, spurred again by social media buzz, has offered another financial lifeline. The company has been quick to capitalize on this wave, hoping to reduce its debt further and stabilize its finances. Yet the core challenges of substantial upcoming debt maturities and the need for a robust operational turnaround remain daunting. AMC's journey through financial turmoil has been nothing short of a blockbuster. But can this new surge provide a lasting solution? At the helm of AMC, CEO Adam Aron has been more than just a crisis manager. When he took the reins in 2015, Aron embarked on a strategic journey to broaden AMC's horizons. His mission? To transform AMC into a global cinema powerhouse. To achieve this, Aron spearheaded the acquisition of 3 major cinema chains: Carmike in the United States, Odeon in Europe, and Nordic in Scandinavia. These were not just mere additions to the company's portfolio, they were bold strides into new markets. The Carmike acquisition, for instance, added significant breadth to AMC's domestic presence, making it the largest movie theater chain in the United States. Across the Atlantic, the acquisition of Odeon and later Nordic positioned AMC as a dominant player in Europe and Scandinavia. Collectively, these deals were valued at around $3 billion. However, with great expansion came great financial leverage. These acquisitions significantly increased AMC's debt, a risky move that later required even more intricate financial maneuvering. As the meme stock phenomenon took Wall Street by storm, Aron saw an unconventional opportunity to leverage AMC's sudden spotlight. The company capitalized on its meme stock status, raising substantial capital through stock sales that were crucial during the liquidity crises induced by the pandemic. Adam Aron's bold strategies have reshaped AMC, but they've also compounded its debts. Will these gambles pay off in the long run? With the stock market's renewed interest, AMC faces old and new financial hurdles. The cinema giant, once on the brink of bankruptcy, now navigates through a complex labyrinth of financial obligations. At the heart of this challenge is AMC's towering debt structure, a formidable obstacle in its path to recovery. Diving into the specifics, AMC's immediate financial landscape is dotted with significant debt maturities. The company faces about $20 million due in 2024 and $118 million in 2025. While these figures may seem manageable, the real concern looms in 2026. A staggering $2.96 billion is set to mature that year, casting a long shadow over AMC's financial stability. Financial analysts have weighed in on this precarious situation. Alicia Reese of Wedbush suggests that while some of these debts may be renegotiated, many will likely only see an extension of terms. This suggests a strategy of buying time, hoping that market conditions will favor AMC in future negotiations. The challenge for AMC is not just about managing current debts, but also about leveraging its position in the market. The recent meme stock frenzy has injected some much-needed enthusiasm into AMC's stock, but the question remains, is this enough to fundamentally strengthen its financial footing? As AMC treads this tightrope, its leadership explores every avenue for capital infusion and debt reduction, aiming to turn short-term gains into long-term stability. AMC's ticking debt clock is a race against time. Can they negotiate their way out of this financial maze? With a second meme wave potentially on the horizon, what's next for AMC? In the dynamic world of meme stocks, AMC Entertainment has once again caught the eye of retail investors. The resurgence, spurred by social media influencers like Roaring Kitty, presents both an opportunity and a challenge. If AMC can harness this renewed interest, there could be significant financial benefits. The immediate potential for AMC lies in raising capital. During previous surges, AMC adeptly issued new shares, capitalizing on its inflated stock price. This strategy provided a lifeline, injecting much-needed cash into the business. With the meme stock phenomenon showing no signs of abating, another round of capital raising could be on the table. Such moves would allow AMC to fortify its balance sheet, potentially reducing its substantial debt load, which remains a looming concern. However, the reliance on meme-driven market enthusiasm is a double-edged sword. While it offers quick financial gains, the volatility it brings is undeniable. The stock price could as quickly deflate as it inflated, leaving investors in a precarious position. This unpredictability makes strategic planning challenging, as reliance on ephemeral market trends is hardly a sustainable financial strategy. Strategically, AMC might consider diversifying its investments, leveraging the capital from stock sales to innovate or acquire complementary businesses could provide more stable revenue streams. This could include enhancing the movie-going experience with new technology or expanding into movie streaming services, tapping into the digital consumption trends that are reshaping the entertainment landscape. Yet, the allure of meme stock status can't be the only card AMC plays. The company must also focus on operational efficiencies and possibly renegotiate its debt terms to ensure long-term sustainability. The management's ability to balance these immediate financial strategies with long-term operational improvements will be crucial. As AMC surfs the meme wave once again, the stakes are higher than ever. Will they crash on the shores of financial instability or ride the wave to a more secure future? As we've seen, AMC's story is one of dramatic highs and perilous lows. The resurgence of Roaring Kitty and the subsequent meme stock wave have once again spotlighted AMC, highlighting both its potential and its challenges. The strategic maneuvers by CEO Adam Aron and the company's efforts to manage debt reveal a complex landscape of financial opportunity and risk. As AMC rides this latest wave, the importance of savvy strategic management and understanding market dynamics cannot be overstated. Keep your eyes on AMC as they attempt to navigate these turbulent waters. Thank you for watching, and don't forget to subscribe for more insights on AMC and other investment opportunities.